Hello, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go over our live mortgage rates, and then we're going to talk about asset utilization loans for our deep dive topic here today. Give us just a moment here to go live on all the different platforms. Appreciate everybody tuning in nice and early. Hope everybody had a great weekend. And definitely a great topic here today. Definitely a mind blower for people that don't know that it exists. So looks like we're live on all the platforms. We'll go ahead and get it started here. We'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat after the presentation. We'd be more than happy to answer any questions. So welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates for a few programs, and then we do a deep dive into a different loan type. Today's loan type is definitely an amazing non-QM loan that we are very familiar with here at the Mortgage Calculator, which is asset utilization loan. So we'll get into that here shortly, but first, let's go over our rates. So Nick, if you're ready, we can go ahead and pull up the rates and see what they're looking like today.
All right. So rates are looking good, still at 1+ year low. So that's great. We will pull up all of our programs and compare the APR across our standard programs as our rates are live for today, September 23rd, just after 11 a.m. Eastern. So all the standard programs have their initial rate sheets. If you'd like a full breakdown and itemized loan estimate that breaks down all the fees that go into the APR, please get with one of our team members. They'd be happy to help you out. So what we will compare today, as we do every day, is a basic scenario. We'll set up a single family home, 500,000 purchase, 400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. Set an estimated 760 FICO credit score and an estimated 40% debt to income ratio. So with those settings, as we do every day, let's check out the live rates. So again, 1.5 year lows roughly for all of these products. So absolutely amazing time to get out there and get going. Our first option, 30-year fixed conventional for a primary home, typically the most common option people think of when they think of a mortgage. Rates today coming in at 5.625, final APR 5.915. So a great option, again, 1.5 year lows. Now, if there's any reason our customer doesn't qualify for a standard conventional option, typically want to quote an FHA option as well. FHA allows more leniency on credit issues and a higher overall debt to income ratio, but does require upfront and yearly mortgage insurance. Rates today come in at 4.75 with all of the fees and mortgage insurance. 5.688 is the final APR. So if our customer qualifies for both, they may want to consider FHA if they're willing to do the mortgage insurance. And the customers that need to use FHA, definitely a very comparable option. And VA, great option for eligible vets and active service members. Rates as low as 4.99. Final APR 5.275 with a standard funding fee here. And notice the final APR definitely beats out FHA and conventional. So our eligible vets and active service members definitely take advantage of the VA program. And moving on to the final standard option, USDA is only for properties in USDA eligible areas. That's the rural areas of the country. If the property is eligible and our borrower is eligible, these are great options to consider. USDA comes in today, 4.875. Final APR with standard fees, 5.598. So if our customer is shopping in these USDA areas and comparing to FHA, it's going to be a touch cheaper and also a touch cheaper than conventional. So great option in those rural areas. And that rounds out the standard options that any bank or lender has. And unfortunately, if our customer doesn't qualify, many banks will have to deny them. But we have 5,000 additional options, starting with our 30-year fixed non-QM alt doc options for a primary home. So if our customer doesn't qualify with conventional documents, 2 years of tax returns, etc., we can switch to alternative docs by switching to this program using bank statements, 1099s, asset related, which is our topic for today, P&Ls, all kinds of different options. Rates today are at 6% for a bank statement option, the most common option. Final APR 6.309. So notice we're within 0.4 today, usually within about 0.5 of conventional, to switch to using alt docs. So great option for our customers that need a little extra help there. We can still get them the home they really want. And going to investment properties, first up our non-QM alt doc for investments. So again, bank statement are similar, coming in at 6.375. Final APR 6.694. And we'll compare that to our other investment options. Remember, there are no government programs, so no USDA, FHA, or VA, but we do have conventional For investment properties, conventional coming in 6.125 rate today, final APR 6.452. And notice that's a touch cheaper than AltDoc, which is typical, and also a touch cheaper than our favorite program, DSCR, with a 3-year prepay. DSCR stands for debt service coverage ratio. No income needed, no employment information needed. Only use the estimated rents from the appraisal to determine the estimated DSCR ratio. If the estimated rents can cover the estimated expenses, that's a ratio of 1.0 or higher, which is preferred. And this option has a 3-year prepay, which is the most common, coming in today at 6.25, final APR 6.553, just a touch above conventional. We were beating conventional for quite a bit with our 3-year option, but right now it's about even. But we can sweeten the deal with our 5-year option. Some of our DSCR programs allow a 5-year prepayment penalty, which beats conventional. Absolutely amazing. Rates as low as 5.875, final APR 6.193. Absolutely amazing. And we do have a no prepayment penalty option. Some states don't allow it, and some customers don't want it. That's not a problem. With no prepayment, DSCR comes in at 6.375, final APR 6.694. So again, a touch above conventional, but most investors prefer a DSCR. And if they can add a prepayment penalty, can definitely sweeten the deal a little bit, adding that prepay. And our final 2 options we always go over, our most popular alternative second mortgage product, our 30-year fixed second mortgage. These are non-QM products that are alternatives to a HELOC, which is typically the option for our customers that want to keep their first mortgage and still get some access to cash. Now we can do our 30-year fixed second mortgages for a primary home. Rates as low as 8.125, which is a lower rate than a HELOC, and fixed. And final APR comes out to 8.527 to get cash out of a primary home without having to touch that first mortgage. And we can use the same programs for investment properties. HELOCs are very rare for investment properties, so these are great options. Rates as low as 9.25 to get cash out of an investment property without touching the first mortgage. Final APR 9.542. And these second mortgage programs are non-QM, so we can use bank statements, 1099s, P&Ls, and similar to our topic for today. Let me switch the screen here, which is asset utilization. A very cool subset of non-QM. Remember, when we pull up the non-QM, we typically go over the most common option, which is a bank statement. But we have tons of flexibility, thousands of different options and programs and variations, asset utilization being one of them. Jose, let's talk a little bit about what this is in general and why we would do this as opposed to a bank statement or the more common non-QM options that we show every day. And then let's check out some live rates for these programs.
Yeah, like Kyle was mentioning earlier in the program, this is definitely a mind blower program because this program actually lets you use assets, liquid funds you may have in a checking account, savings account, 401k, Robinhood account, retirement, IRA, anything that can be converted to cash, liquid, or even like the 401k semi-liquid can be used to qualify the borrower. Now, there are a multitude of different guidelines for this, so I can't really tell you what the exact formula is because each investor will have their own income calculations. But the important thing to note, the assets do not have to be pledged. You only have to have owned them in your possession a certain amount of time. Again, that's going to vary. That's called seasoning of the asset. So you do have to hold it a certain amount of time so that the asset can be considered. And that's simply it. It's going to be the total value of the asset portfolio is going to be divided by the number of months for that particular investor. And that is how they will calculate the income. It is a very amazing program. We used to have these options that are available from like large brokerage houses where you're actually pledging the stocks and bonds and the other financial instruments. In this case, you're not pledging anything. You're just providing the statements. So let's get right into it here with our asset utilization options for both primary and investment properties. As with all non-QM, the maximum LTV for all non-QM is 90% LTV. And in this particular scenario, we are able to attain 90% LTV for a primary purchase. So here you're looking at 8.5% lowest cost option at 3/4 of a point. And you can buy that down all the way to 7.49% at a cost of 2.5 points for asset utilization primary purchase with 10% down. Now, our asset utilization investment purchase with only 15% down, and look at those rates, right? 7.99 lowest cost option, 3/4 of a point. You can buy that down all the way to 6.875 at a cost of 3.25 points for our investment asset utilization, 85% LTV. And now for our low credit score borrower, we are looking here 600 credit score being the minimum that we have for this product, 20% down being the minimum down payment as well. And it is 11.125 lowest cost option, and you can buy that down all the way to 9.499, and in this case this happens to be for an investment purchase. And now for some cash out options. Last two options here are cash out. Here is our asset utilization. Primary cash out, maximum loan to value is 80%. But do notice as we lower the LTV, look at the cost on those rates. 7.625 is at par. And you can buy that down all the way to 6.5% at a cost of 2.375 points. And our last option here is our asset utilization investment property cash out, also amazingly 80% LTV. And we are looking at 8.124 being our lowest cost option at par. And you can buy that down all the way to 6.874 at a cost of 3.5 points. So some incredible options this morning for asset utilization loans. So do look to the mortgage calculator for all your outside the box loan solutions.
All right. Looks like we have some questions here, so that's good. Let's start pulling up the questions here. And if you have any more, you can drop them in the chat there. We'll pull up the first question. First question is, can we do construction loans using our land as collateral in DSCR?
Well, not exactly, but I will state the following. If this is an investment construction loan, right, for a spec home, it never uses the personal income of the borrower. If we're using a true ground up construction option, that is simply going to use the profit on the deal. So no need to have to worry about going DSCR if it's an investment property that is getting built with a construction loan and you're using a true ground up construction bridge loan. The only time when income is going to come into play for a construction loan is if it's a primary or second home and you're using one of the one-time close construction loan options.
All right. Next question is, do we do SBA loans here at the mortgage calculator?
We absolutely do. Make sure you tune in. I know we recently had a show, and we'll have one again in the not too far off future. We do offer SBA loans that have real estate and SBA loans that don't have real estate, where they're just buying the business opportunity. A lot of people don't think that that's possible, but absolutely, we can do SBA loans with and without real estate.
All right. Next question is, does age play a factor with the 401k when utilized as an asset due to taxes and fees of early withdrawal? Great question.
Well, I mean, if we're talking about age of the borrower, no. I mean, you can't discriminate based on age of the borrower. And now maybe we're talking age of the assets, like seasoning of the assets. You usually have to have those assets a certain number of months before they can be used and counted towards income calculations.
But if there is a penalty on withdrawal, that's taken into account, correct?
Yes, you do have to provide the terms and conditions of withdrawal. What's going to happen is that usually for the asset type, there will be certain haircuts, like we like calling them. So for an asset that has less liquidity, like a 401k, it's not going to be counted at 100%. It's going to be given a haircut, and that's how they're going to deal with the reduced liquidity.
All right. Looks like that's it, but thank you for the questions. Definitely appreciate it, and amazing program here. let's go ahead and wrap it up then. Remember that we do this show at 11 a.m. Eastern every weekday where we go through our live rates and then do a deep dive into a different loan type. So we'll have a new loan type for you tomorrow. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily